a share price for 5 rupees. I mean, worth if that does come through and there is relief which is provided via the petition. We've got what the Nifty starting in the red as expected, but barely so. I mean, 25,023 is where we read. The Sensex is about 81,700. Bank Nifty, the real drag is down about 0.2. So more prominently, 51,050 is where the Nifty Bank is at. Mid caps have got a tinge of red, green, beg your pardon. And I think the small cap index starts higher as well. IT index is down about 0.5%, so some sectoral sort of indices up on your screens, but it's more down than up. That's a Nifty heat map, and I think you've got easy 30 stocks lower, and the rest which are higher. Some opening up as of now as well. So nothing material at all. It's a very flattish and quiet start right now. 25,020.
Okay, let's watch out for all the block deal action movers first and see what's happening on Interglobe. It's down about 2%. PB Fintech is up about 2.5%, and Wellspun is a little flat on my screen. So let's see how that plays out. Those are the big newsmakers. Speaking of newsmakers, just want to pull up TV18 with, of course, the caveat that that is the company that runs and operates the channel that you're watching. The early tick that I saw was fairly upbeat. Yeah, it's still about 4% up on TV18 broadcast. So those are the newsmakers, but back to the main screen now. So where's the pressure? Hindalco, Ultratech Cement, Mahindra and Mahindra, Axis Bank, Dr. Reddy's. Now, these are the top 5 losers in the Nifty. Very, very diverse, as you can see. Not much of a sectoral trend. But you can safely say that there's some profit taking on IT. HCL Tech, Infosys, these are stocks on the lower side. Some of the banks like Axis and IndusInd have also started off on the weaker note. But then IT split down right the middle. I just took the names of the losers. Look at the winners here, because bringing up the upside for the Nifty is Wipro. Even Tech Mahindra up about 0.5%, and even TCS is managing a little bit of a flash of green for the time being. So IT trends are very mixed. Reliance is helping the bulls' cause by at least staying on the green side of the flat line. Not much of an up move, but a little bit of green for what it's worth. ITC is up. But it's absolutely flat, Nigel. So let's just take it down to the individual newsmakers. I think that's where the excitement is, because Nifty is not doing anything right now.
Well, that's right, Shurbi. NBCC is seeing some follow-through buying. Yesterday it was a big winner. Today as well, it's up close on 4%. One of the top volume stocks today. Both REC and PFC, they're reacting to that brokerage call. So both of them doing pretty well in today's trading session. Sonata Software, well, they won a multi-million dollar deal from a US healthcare company. The street likes it. Well, the stock is flying away, up close to around 6%. IndiGo Aviation, yes, it's a little lower, but just keep in mind that, in fact, the stock has come off the low of the day. The demand is fairly good. Now it's considerably off the low point of the day, and because the promoter entity is selling out, the global indices will have to rebalance themselves. The free float increases, and that's why they will have to. So that's why the stock has recovered quite a bit from the day's low. Top volume movers in trade, Paytm, you'll mention. Jyoti Structures won an order late in the trading session, so that as well is higher. And TV18 and Network 18, both of them buzzing along as we speak. So a flattish to a mildly negative start, par for the course, guys.
Absolutely, and it's neither here nor there at this point in time. And I'll just make a few other mentions. So I think Idea is up 2%. Idea has got is the second largest volume-led gainer. We were just discussing this with Rima earlier. And Paytm, of course, about 3% in the green. We sort of spoke about this with Gurmeet. KEC is coming up with a 4% pop, so 900 plus on KEC. I can spot J&K Bank, which is up 3% right now. Tata Investment Corp has been, so I think day before yesterday, Tuesday or Monday was a big 20% day for Tata Investment Corp. It's starting about 2% higher. Keep an eye out on this one. Network 18 is up a full 6.5% now. Of course, I mean, part of the group which owns the news channel that you're watching. So 101, 102 on Network 18 on your screens. Look at the volumes there as well. Genus Power is up 5%. There is Aarti Pharma, which is up 6%. And I could go down the list, but volumes then start to thin out a little bit. On the downside, maybe, just take a look at a few names here. CDSL is got a cut of 3%. Stocks at about 1450. Very large volumes for this point in the day. I think Zentech is another one which is down about 5%. Suzlon is down about 1.33% at this stage. Bombay Dyeing is down 4%. Bombay Dyeing at about 215. Inox Wind is one of those huge performers. Stocks down about 2.25. Edelweiss is another one of those big performers. I think from about 70 rupees to 115 in 3 weeks flat. Stocks taking it a little easy today this morning. I mean, NIIT Limited is another one, which is, I mean, these are all just pullbacks after what have been very, very sharp runs in a very short time span. So, I mean, the market texture is just that. A little bit of halt, a little bit of pullback, and then we kind of start to just move up again. For the Nifty, we're down about 20 points right now. Yogesh Patil is Chief Investment Officer at LIC Mutual Fund. He's with us to take some questions on what he's making of the market. Yogesh, good to have you with us here. Good to have you back indeed. Prashant this side. What's your sense, Yogesh? Are you comfortable at market levels? What have you been doing? Because flows are coming in into mutual funds. It's getting deployed. Promoter sale, early investor sales, that is also keeping a pace. There is large IPOs which are lined up. Just assess the state of the market. I'm talking about the next, say, 1 quarter or so. How are things looking?
Yeah, good morning, Prashant, and thank you very much for hosting me on your channel. See, this can be debatable. If you see last 3 years, we keep debating in the market. But valuations are gone up, but at the same time, fundamentals also improving. So we need to factor both things. I completely, not saying is a completely overvalued or a very fair value, undervalued. We need to check the sector outlook, and basically it's a stock specific and sector specific market always. And in terms of inflows, definitely India is getting, there is sea change in the retail investor mindset in last 3-4 years, where inflows are much better compared to historical averages, because the real interest rates benefit is not visible for retail investor, and that's how they choosing mutual fund. And it's a good start for a country like India. Every time we depend on FI's flow or maybe some institution, but this time is completely diversified and FIs are absent. But in terms of earning growth, we see a moderation in earning growth for this year, and maybe for next year, a mid-teens kind of growth. But overall, we don't think market is an overbought position, and is a more or less fair valuation, we do say, because India, the fundamentals of India has completely changed, because government changed a lot of strategies, reforms, focusing domestic manufacturing. It improves the outlook of India, maintaining good relations with all countries, and improving, focusing on manufacturing, controlled fiscal deficit, inflation, make the country and macro improving. At same time, currency stabilizes and is a more of a financialization of rupee. So more and more FDI, more and more FI and trade partners will come in next 5-6 years. So this is a long-term trend, and India's story is completely capex-driven story. So it is not like a 1 or 2 year. So it is for next 5-6 years, we do see a good investment in industrial side, especially on power side, railways, defense. So it's a much broader and longer theme. Like even power alone requires almost 30 lakh crore in power generation, basically. As of now, we have renewable power of 1,43,000, and 3 lakh yet to added in 5-6 years. And that to be true transmission, and we need a more transmission capacity in for solar and wind. So kind of capex we see is huge, and this is first time is happening in India. And and Chinese players and Korean players are not present in India as well as in US and Europe. So complete opportunity for India and export opportunities also for India is very, very high comparatively.
Okay, all right. Hi, Yogesh. Good morning and good to see you in. There's Nigel on this side. Talking about the power themes, either you could play those transmission, the other company is renewable plays, but the other way to play it was the power financiers. And you have got a couple of them in your list, PFC as well as REC. We have a brokerage note this morning, UBS, they're talking about how their book will change from year on. The asset quality is far better, and they also have access to relatively cheaper funds. What's your view on the power finances from here on? Some of them are up, 4-5 times in the last 24 months, but some still look good from here. Tell us more.
Yeah, so for next 6 to 7 years, the overall power sector investment, including generation and transmission, could be around 50 lakh crore. So initially, the opportunity is only with financer and then asset creator, which is basically capital good companies and engineering, and that could be, and then after 4-5 years, earning growth could be translated to asset owners and users. So if anyone want to play the power sector, initially you go by stage. You start with financing companies, then asset creators, which is basically engineering companies and capital good companies. So if anyone want to take the opportunity, so we need to take the full basket. May not be exactly one, two segment. So that's one of the reason we diversified our power sector bet in across the board, including generation, transmission, and financials.
Okay, Yogesh, hi, good morning. So just if you talk about the overall, big overweights across the schemes, across your portfolios, in terms of sectors, what would those be?
See, industrials, followed by BFSI, consumer. These are the broader sectors. And then again, some sector-specific, small, like discretionary consumption, automobiles.
So on consumer, I was just coming to consumer actually to understand how you are playing it, because there's this narrative that obviously now rural is really picking up, and we've seen that. I mean, two-wheeler stocks have been doing exceedingly well. But then and there are stocks like Trent, for instance, that talk about mass consumption and not doing badly at all. But then obviously there's the higher end side of it as well. So consumption, how do you cut it up between autos, between staples, or maybe even, the new age platform companies like a Zomato? Everything is consumption, right, at some level.
Yeah. See, what we understood from talking to so many people, the consumption was not actually slowed down. They actually, the priority is very different for them. Maybe at some point of time, mobiles, maybe garments, and then again, two-wheelers. It is not exactly, it depend on their need, but exactly consumption basket is very difficult to predict. But overall consumption is not going down. And in last 2-3 months, there is some green shoots coming from rural economy and some optimism from FMCG companies. So we do see some improvement from here for next 2-3 quarters. But it's too early. In past also, after industrial cycle, the consumption cycle has to balance. So that kind of approach we are keeping here. But India is again a well-diversified country where consumption, nobody can ignore consumption here at some point of time.
Yogesh, banks are still the largest part, I think, of your portfolio if I look at sector allocation. And obviously, because it holds the largest even on the Nifty and most indices. How do you approach the banking theme from here? The largest name hasn't moved. HDFC Bank, and valuation-wise as well, looking pretty okay. A couple of private sector banks, you name Kotak Mahindra Bank, HDFC Bank. At current reckoning, post the run that you're seeing on PSU banks, and maybe a lot of the good news is in the price for the PSU names, how would you approach the banking theme?
Yeah. See, in last 2-3 years, considering the valuations of PSU, and a large part of the growth is captured due to improvement in credit cost. And from here, we do see improvement in private banks, because private banks invested a lot in branches and their IT infrastructure. So operationally, they will do well going forward, because for banking, large part infra projects are not coming. So the growth could be consumer and it's completely customer service driven. And we do believe private sector is much more capable compared to other smaller banks and PSU banks. So incremental growth could be captured by all these big guys, private banks, and valuations are also supportive. And ability to raise deposits and ability to handle some of the issues which the larger banks are much better placed. So that's we are positive on BFSI space, but that to be on even larger banks.
So you'll be leaning more to private in comparison to PSU banks at current valuations, right?
Yes.
Yogesh, you own Shakti Pumps in one of your funds, right? Stocks had an incredible run. I think it's up 10x in the last 1 year, maybe a little over 1 year. Without sort of really talking to us about the prospects, I'm sure you have limitations in terms of what you can do there. But what's the broad tailwind driving this? Is it sort of government focus in segments that they operate in? Is that the big tailwind?
See, overall industrial capex, everything, look, we require everything. But let's take a new segments like data centers, solar pumps. The demand for pumps has gone up because of government focus on solar pumps. At the same time, overall pump market has grown up because there is a various investments coming from data center, and the inquiry levels are very high in other chemical company as well. But the last 2-3 years, government focus on solar pumps actually resulting in a big growth for this segment. and the solar pump sector growth could be very high in coming years. And at the same time, it is not a, why the government wants solar pump, because they want to reduce their power cost, what they provide to farmers actually. So they are actually net beneficiary, and these are the new trends for overall pump sector, not with only one or two companies. Most of the companies are try to figure out their opportunity size across the industry. That includes various industries like chemical, pharmaceutical, and refineries.
Okay, all right, Yogesh, we will leave it on that note for this morning. Thank you very much for joining in and giving us some perspective on the market. That's a view coming in from LIC Mutual Fund. Just to go back quickly and check out the screen, we're still looking at extremely flat trends in the Nifty. It's absolutely even. See, look at that, just 1 point lower. That's as quiet a morning as the one that we are looking at right now. Absolutely no change, and even the mid-cap index is completely flattened out. Bank Nifty is flat. Everything is flat. Well, good time to then go to our next corporate conversation. Then the company in focus is NHPC. Recently, there was the unfortunate event of a big, massive landslide, which impacted the company's Teesta 5 power station and damaged several parts of the structure as well. But we must remember that there was heavy flash flooding last year. This is October 23, because of which anyway, this particular power station was in a state of shutdown. So talk about the outlook ahead. I mean, what happens in terms of just assessing the impact of this event and the broader outlook for the company. We have with us Mr. Rajkumar Chaudhary, Chairman and Managing Director of NHPC. Mr. Chaudhary, thank you so much and great to have you on the show. So first of all, we really hope that there was no loss to human life. Just tell us what's the update on Teesta. I'm guessing in any case, all of these are completely insured. So no financial implications on the company, I assume, because anyway the plant was in shutdown?
Yes, you are right that during the last year, October, the glacial lake outburst was there. And due to that incident, the plant was suffered damage apart from other power station and plant. So the plant was under shutdown, no generation was going on. On 21st of this month, August, there is a landslide just above the TRT outlet structure and GIS building. So that landslide, it is a natural phenomenon. There was nothing because since last 16 years, the plant was in operation and the slope was stable. So due to this monsoon rain and other geological phenomena, the landslide was there. And there is a loss of this TRT gate operation hoist structure and GIS building. Yes, GIS building. These are all insured. So under mega insurance policy, these are insured.
Correct. So we're just trying to understand now what happens to the timelines. I mean, you were anyway looking to get Teesta 5 back on stream. Now there's a landslide issue as well. So what is the timeline that we're looking at by when this plant can come back on stream? And what is the contribution? What is the projected contribution of this one plant to your overall output? So we just know how much is off stream when it comes on stream, and what is the contribution when it does?
Before this incident, we were planning to bring back the Teesta 5 into generation by March, April next year. And we were doing the restoration works as per the schedule. So this incident has, has taken the project generation plan delayed. So now we are expecting that within 1 year, it will take almost 1 year or around that. So we will bring back the generation of the power station back. And
so should we say December, sir, should we say December 2025? Now we're in 24. I'm just trying to understand. When you say 1 year.
Almost, because GIS structure and pothead yard structure are damaged. So GIS gas insulated switchgear, we will just tender. Just our incident, our expert team visited the project site from head office, and our director project also visited the project site. And just we are working on the how to restore quickly.
Okay, so maybe third quarter of next financial year, but then I think we should talk about the rest of the business in the meantime.
And you have asked the generation, what will be
Yes,
the
sir.
generation? So
Yes.
the annual generation is around 2,500, very good project, 2,500 million units.
Okay, Mr. Chaudhary, good morning. So two, three
morning.
questions. Who is the insurer, sir? Who's the counterparty?
National insurance. National insurance.
Okay, national insurance. And what's the claim amount?
Claim amount, we are just assessing. However, we have intimated the insurance company as 400 crore. The previous incident, last year incident also, we are in the process. We have received some advance payment also from the insurance company, around 200 crore. So
No, for this incident you've received.
yeah, this incident not. The last year incident.
Last
we have,
incident. So that's what I'm trying to understand. When you typically, how long does it take? You file now, and I mean, it takes for the money to come in, for the claim to be honored. How long? What's the process? What's the cycle look like?
We have already intimated to the insurance company regarding the incident of loss, and we have intimated that we are assessing. Preliminary assessment, we have intimated 400 crore, but in detail, because we have to give the calculation and all details. So we will give the detail of loss to the insurance. We will submit the detail of loss to the insurance company.
All right. Hi, Mr. Chaudhary. So we have got a fair idea about this particular project. Let's understand business on the whole, because that's something that the market is looking forward to. For this year, what kind of a revenue growth are you looking at? Top line, bottom line, if you could give us a guidance. And also, you had an ambitious plan for 2028, when a lot of projects will already be on stream. So what's the targets over there?
We are expecting that whatever we have achieved the revenue and the annual generation during the last financial year, though we are expecting the same to be achieved during this year also.
So a 10% growth, sir, in comparison to the previous year?
No, similar, same generation we are going to achieve. Next year we are going to achieve more. So this financial year, we are going to commission the Parvati 2 800 megawatt project by the end of December. We are targeting that is 800 megawatt, and that generation for 3 months we are expecting. And with that commissioning, we are expecting some increase in the generation of Parvati 3 also, because the tailwater level, tailwater will go to the reservoir of Parvati 3. So, but there is less water in the river. So during this monsoon period, we are getting lesser water and lesser generation in comparison to previous year. So with commissioning of Parvati 3 and this, will be all achieving the similar generation and revenue profit.
You know, Mr. Chaudhary, last year you did close to around 9,600 crores. Previous year it was 10,600. So you have been in that vicinity of around 9,500 to 10,500 crores on the top line. Your current market capitalization, I think, is close to around 96,000 crores. And for the last year, you did around 4,000 crores of PAT. So let's focus on the bottom line. This year, what will your PAT look like? And for 2028, post Parvati coming on stream and the other factors that you've mentioned, what can your bottom line look like?
Bottom line also, this year we are expecting the similar around
4,000 crores. And 2028?
From the next financial year, it will be increased to 7,000 crore. Next
7,000.
Because Parvati 2, Parvati 3 and Suvansi, we are going to commission 3 units, 750 megawatt during the March of this financial year. So that accumulates this financial year 24, 25 and 26, 27. So we'll increase the PAT to 7,000 crore.
In 27, right? In FY 27.
Oh, yeah.
27, 28.
27, 28. I hope your team is on board, sir. You know, they seem to be hinting something. So we are taking it from you here on CNBC-TV18 that in this year, the PAT will be more or less stable. But in FY28, it's around 7,000 crores, right?
Yeah, FY28, it will be around 7,000 crore. More than that.
For all this capex that you've lined up for the next 7 to 8 years, earlier we were working with a number, I think, of around 12 to 13,000 crores. Then it was increased to around 15,000 crores. So tell us, what is the fresh guidance on the capex, and break it down for us as well.
This year, our capex is more than 11,000 crore. And we have already spent 3,200 crore by July end. We are on the target. Last year, we spent more than 8,000 crore capex. So we achieved more than 83% of the target. But this year, we are on the target and we'll achieve more than 11,000 crore capex.
Sir, just one last number. You've already given us the way the profitability will increase as Parbati 2, 3 and Subansiri come on stream. The regulated equity, I believe it's close to 12,800 crores as of now. Yeah. As these projects are commissioned, how will the regulated equity increase? So just give us the numbers FY25 and FY26 and then going into 27, 28.
FY28, till FY28, the regulated equity will be 29,000 crore.
Okay. And this year? I mean, this year
same. This year, same.
This year it will be the same and then goes up to 29,000 crores.
Yeah.
Right. Okay. Just one point, Mr. Chaudhary, and I don't know if you see this as a risk. These increasing sort of weather-related developments, I mean, be it landslides or flash floods, and I mean, you have to operate in regions which are susceptible to these weather events, right? Natural disasters, etc. I mean, how sure is that? When you see this as a risk or something that one just lives with, and financially, does it have any implications? I mean, do premiums go up substantially? I mean, you can give us a sense, sir.
Yeah, you are right that with such incident, the insurance premium have gone almost double or more than that. 500 for our mega insurance policy, more than 500 crore annual premium. Such a natural incident and geological incident are expected in the young Himalayas. Only thing now the government agencies, various government agencies and including NHPC, focusing on the early warning system. So with the help of early warning system, we can know about the incident earlier, and so that we can minimize the loss of lives or loss of properties.
Got it. What is the annual premium now, sir? I mean, what you pay out every year?
500 crore mega insurance policy. Yeah.
500 crores, and this is the annual number, and this is what you paid out in what you will pay out in 25, or what you paid in 24.
Same 500 crore.
500 crores. Okay. Got that. Thank you very much, Mr. Chaudhary. Appreciate you joining in and running us through all of that detail. So FY28, big numbers, big plans. So from 4,000 crores, number goes up, but the PAT level goes up to 7,000 crores. But that's still, I mean, sometime down the line. 96 on NHPC. It's come off the highs, of course, and now consolidating. We'll take a quick commercial break here. We'll come back. We'll have Param Subramanian, Vice President Equity Research at Nomura. We discuss the big deposit concerns for the banking system. Stay tuned, that's coming up. Welcome back. Let's put the spotlight on banks. Nomura in a recent report says that the debate around deposit mobilization and high LDR ratio has shown no signs of abating. They are adding the argument that banks are unable to mobilize deposits is misplaced. To discuss this and more, we have Param Subramanian, Vice President Equity Research at Nomura, now joining in. Param, good morning. Great to have you with us here. Thank you very much for your time. So, why don't you begin by making the case when you say that they are unable to raise deposits? I mean, obviously you can raise deposits, but if you pay out more, right? I mean, at some rate you'll be able to raise deposits. Is that what is happening? And if you can give us a sense, so compared to FY22, if you take all banks in question, public, private, everything, the amount of loans that they all made, I think it was about 23 lakh crores. Will we in FY25, will that number be lower? Or are you assuming that absolute number to actually go up? Your thoughts?
Sure. Thanks, Prashant. Thanks for having me here. So two key points that we want to highlight. Of course, there's been a lot of discourse around deposit mobilization for banks. Now, what we want to highlight here is that the main two reasons for deposit mobilization being lower, loan to deposit ratios relatively looking higher. Firstly, if you look at the money creation by the RBI, what is called the reserve money often, that has actually been very low over the last 2 years. It's only been about 60,000 crore cumulatively over the last 2 years, compared to about 6 to 7 lakh crore on average per year in FY20 to 22. That is one of the bigger reasons for deposits in the system looking lower. The other reason is a bit counterintuitive here. It's that the higher profits that the banks are generating right now, the banks are generating about 1.7% system level ROAs, and ultimately the profits of the banks are appropriated from the depositors. So when the profits go up, the deposits do see some shrinkage, and the real ratio one should be looking at is loans divided by deposits plus the net worth of the banks, which is actually largely in line with the 10-year average. So this whole discourse that banks have some struggle in terms of deposits is actually not very correct. One of the key reasons, like I highlighted, is actually how the
I think we lost a line there with Param. We'll just sort of try and have him back. We got a fair bit in terms of some of the reasons that he was highlighting, but we'll just try and have that line back up with Param in just a bit from now.
I guess one of the key points that he's making is that money supply hasn't increased as much. I mean, that is still fairly muted. So then the argument that there's a massive sort of hunt for deposits, perhaps it doesn't quite add up. But let's see when we get him back. The whole point is that quarter after quarter, we keep seeing the reported numbers. And that's where there's either zero growth or lackluster growth, or sometimes, no growth at all. And another telling factor is that CASA ratio for most banks in the first quarter has been slipping, both quarter on quarter and year on year.
And you talk to banks, Surabhi.
Yeah,
I mean, they all say, sometimes on the record, sometimes off the record, that there is a you got to sort of work on deposits and deposit mobilization, etc. But Param was making some interesting points, and unfortunately the line went off.
I mean, even the finance minister kind of acknowledged. I remember in her meeting with bankers, which happened, I think, just last week, saying that banks need to look at more innovative ways to retain deposits and sort of get customers back. But I don't know. Do we have Param back?
Yeah, we have Param. Param, go on. We lost you there, but please, I mean, we heard. You were midway, so please continue and finish that point.
Yeah. So firstly, one of the bigger reasons for deposits lagging loan growth in the system over the last couple of years is actually the pace of reserve money creation by RBI has actually been very low compared to the period before that, the COVID period, when so over the last 2 years, RBI only created about 60,000 crore of money supply on its own, versus about 6 to 7 lakh crore on average created in the period between FY20 to 22. That is actually one of the reasons, and this is a central banking action, and it's not something that banks can do much about. The other reason I was pointing out is that when banks generate higher profits, the profits are ultimately appropriated from the depositors, and so higher profits have the effect of reducing deposits at the margin, and this is something, as we all know, banks are going through a very good cycle and are generating high ROAs. That is also putting some pressure on deposits. There is also this discourse that money is flowing into capital markets, into mutual funds, which we think is misplaced. It doesn't have any impact on system deposits. The only leakage from money supply to deposits is cash in circulation. And if you see over the last 2-3 years, cash has only been growing at single digits over the last 2 years. So that is not a systemic concern. We think that once we move into an accommodative sort of policy and liquidity in the system starts picking up as a consequence, with RBI, say, being more accommodative, deposit growth should start picking up, and we should naturally see LDRs at a system level coming down.
But while we take that point, Param, the counter question that really comes to mind immediately is that the RBI itself has been cautioning against credit growth running away and deposit growth not keeping up pace, right? I mean, it's not a written down rule, but the understanding very clearly is that the credit deposit ratios have to move to a more sustainable level. No bank, I think, talks about a specific number, but everyone agrees that, yes, the RBI needs it to be in a certain healthy range. So if that is to happen, and while deposit mobilization picks up and rate cuts happen, are you expecting a drop in credit growth in the meantime? When do we see the balance coming back?
No, you're absolutely right. So the policymakers have clearly made it, a key focus area that loan to deposit ratios need to come down. We've also had RBI come out with a draft LCR circular that in some way enforces this, that brings LDRs for the system down. And until the policy environment and you see the powers that be continue to talk about this, of course, you will have to see credit growth moderating for the system, especially for some of the higher loan to deposit ratio banks. They will have to see loan growth moderation. From the current 15% odd system growth that we are seeing, ex of SDFC that the system is reporting, we actually think there will be some moderation going by the end of the year to about 13%. But the key point that we wanted to highlight is that this is not a systemic concern that deposits are not coming through. It is more a cyclical phenomenon that will correct itself.
I mean, Param, if you look at ECBs, right? I mean, just one of the data points. A lot of banks, actually more NBFCs maybe, they're raising money through ECBs from the beginning of the year. I think the pace is almost double of what we saw for the same period last year. Isn't that a sign that, deposits are hard to come by?
So if you look at the quantum of those numbers, Prashant, they aren't as, from a system level perspective, you have to put it in context of the fact that a system level deposit number is about 250 trillion rupees. Of course, we're seeing ECB mobilization pick up, and it's more a non-bank phenomenon or a corporate phenomenon. But it's not a clear indication. If we stack it up against, say, the net worth generation by the banks over the last 3 years, it's been about 6 to 7 trillion rupees over the last couple of years. The banks are actually, strengthening their balance sheet because the profits are coming through and actually bolstering their CET1 ratios. They have the ability to lend. The constraint is not, very significant at this point in time. But if you have the policymakers talking about this, naturally they will have to abide by this, and the loan to deposit ratios will have to come down.
Param, just to wrap things up, two specifics. One, by when do you expect the problem to resolve itself? Basically, by when do you expect deposit growth to start showing up, number one? And number two, and this is not a stock call question, well, you mentioned that credit growth will have to come down for banks where the credit deposit ratio is too high. Just some names, and again, not related to the stock price, but just some banks which will have to see a moderation in the credit offtake.
Sure. So deposit mobilization, I think at a system level picks up around the time of we move to an accommodative sort of policy stance from RBI. We would think that, once we move into, say, rate cuts gradually, RBI will bring liquidity into the system. It will want to transmit those rate cuts, and the natural way to do that is to push liquidity into the system, and that will, have a consequent positive impact on deposit mobilization at a system level. So we'll have to watch out. Of course, at this point in time, we are early in that cycle. We'll have to watch out. But I would think around the time rate cuts begin, we would start seeing that. The other point you were asking on growth moderation. Look, it is well understood. Some of the banks, for example, HDFC Bank, has clearly talked about a moderation in its loan growth outlook, and this is well understood. It is a transition period, as the bank has called out, and we should think that over the medium term, once they get this in order, things should be back on track for them as well. Yeah.
All right, Param, we leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC TV18. I think, the market was sulking a little bit and it's picked up pace really nicely. So we're up about 45 points at about almost 25,100. So I think back almost at yesterday's high. Yesterday's high was 25,130. We're at about 25,100. Ajit?
Guys, just one thing. Resourceful Auto, you remember that one, right?
The listing was today.
Yeah. What did it list at? Any idea? Let's take a wild guess. Such a big subscription, so much of talk. What is it? You know how much it is in comparison to the IPO price? Not moved at all. 117 was the IPO price.
Oh, wow.
So that's what it is.
All the hullabaloo.
Yeah.
And,
the bikes are not moving, I think, for now.
Actually,
or maybe the bikes are moving, the stock is not.
No, we should put that out as an alert for our viewers in terms of that listing which has happened. It's an SME listing, but that's an interesting factoid. And we can talk more about this as we go along. The other big sort of talking point through the course of the day in the second half especially will be the Reliance Industries' AGM. This is the 47th annual general meeting. This 2 p.m. is when Mr. Mukesh Ambani, chairman of RIL, will be addressing investors. Markets are awaiting sort of definitive concrete plans as far as Jio and the retail business listings are concerned. Of course, I mean, it's a conglomerate. It's many, many businesses in one entity, which is RIL. Prabal Sen is energy analyst at ICICI Securities. Prabal, good morning. Great to have you with us here. Appreciate it. I'm sure that some of your colleagues track other parts of the businesses of Reliance as well, right? So you would have put your heads together to kind of come up with what really markets are watching. So put on that hat for us, not just the oil hat. What should we watch out for from the AGM today, Prabal?
The listing price maybe for Jio and retail, as well as the time of listing. That'll be great.
Are you being serious?
No.
Look at the smile. We see the smile, probably, yeah. But
I just had to confirm. I mean, that was a poker face.
No, I think on a serious note, if you look at the last couple of years in terms of what the expectations have been, to be fair, I think concrete news in terms of either timeline or milestones around the unlocking of value of both retail and Jio has been expected probably for the last couple of years. So this time it's not much difference. I think the reason why probably there is more optimism, including on our side in terms of more concrete news, is because the tariff increases that have been awaited by the markets, particularly in telecom, have actually come through to a certain extent. So therefore the question now becomes are these numbers and is this visibility now enough for the unlocking of value and for the strategic investors to basically look at a price and say, hey, this is a price that we can look to monetize and therefore go to the public. So to that extent, I think the probability of some more news coming through for both retail and Jio probably increases. Having said that, as I repeatedly mentioned, this has been expected for the last couple of years, probably for the last 3 years. We have been basically building in this expectation. So I don't want to speculate too much on exactly what will be announced with respect to the listing. Any news that comes through, obviously providing any clarity on what the roadmap is, will obviously be taken positively by the street. That's how I'll probably look at it.
Sure, absolutely. Prabal, I guess that remains the one big announcement that we watch out for. But coming down to more specifics of the part of the business that you track, and that's energy. Now, I remember it's been, I think, over two to 3 years since we started getting the big roadmap on the renewable energy side as well, right? The gigafactories at Jamnagar and, everything that's happening over there, the electrolyzers, etc. Now, from that perspective, what are the further specifics that could provide a fresh impetus to the stock? And I'm purely talking about the energy business now. What would you want to hear?
No, sure. I think if you look at the annual report that was released, probably about a month ago or so, or probably not even that, it does talk in more detail in terms of work that has been done specifically on the solar front. I think it's a reasonable expectation perhaps to look at basically milestones being probably talked about in terms of setting up of the 4 gigafactories that were spoken about for the first time a few years ago when the investments were first announced in the renewable space. So any milestones, I think, with respect to maybe specific capacity related numbers, whether it's in terms of solar or in terms of green hydrogen or blue hydrogen, whichever one is more feasible right now. I think milestones on that front is something that we would definitely be looking forward to. In addition, not just in new energy, but if you remember, there were specific petrochemical expansions as well that were announced. They have stated their long-term goal to essentially move to more and more conversion of crude oil as such into direct chemicals and specialty chemicals. So my sense is that there could be more announcements, more strategic direction that could be announced in terms of how that will be achieved. So those are the two aspects that I would probably look at in this AGM speech.
So Prabal, let me ask you this. In the SOTP right now, how much are you ascribing to upstream? How much is, overall O2C? And I don't know, is new energy getting any valuation as of now in target prices? What will, if not now, then what's the roadmap ahead on it?
So to answer your first question, OTC plus upstream would probably be in terms of my overall SOTP target price of close to about 2,900 rupees. Around 700 rupees odd comes from OTC, 700 to 750, including upstream. Retail and Geo obviously are much bigger components, and I'm talking about EV, not equity value, because net debt becomes sort of a consolidated number to be reduced. But in terms of the overall EV of around 3,200, 3,300 rupees a share that we have, almost 2,000 rupees actually comes from Geo and Telecom alone. Geo and retail alone. About 700 to 800 rupees comes from the OTC plus upstream segment. But new energy, to answer your question, as of now, we value it at about 1.5 times capital employed on the basis of the 70,000 crore that was announced as a targeted investment. As I said, as and when we receive more clarity, as and when we have more understanding of the economics of both the solar, hydrogen, and the other projects, that is my sense where, earnings can get up and down depending on the progress made. But I would believe that even the street does attribute some value. When I say 1.5 times capital employed, that translates to around 150 rupees a share of enterprise value at this point of time.
Prabal, in terms of timelines, if they sort of decide to go ahead and do this, right? What is your assumption? By when are we looking at these entities coming to the market?
Honestly, I would not.
The earliest they can do. I mean, if you start now.
Well, I think if they start now, given the size and scale of both the businesses, I would be surprised if they can get it done in a very short period of time. You would probably look at, from a filing perspective, from a timeline perspective, not earlier than probably a year. But I would not want to hazard a guess, to be honest, in terms of what they would be looking to do.
Prabal, just to cap it off, so I heard you clearly, you're ascribing 150 rupees of EV, and the metric is 1.5 times the capital employed. I mean, if we look at global examples of renewable businesses, new energy business, something comparable, then what kind of valuation multiples, perhaps in future, I mean, when the scale-up happens, what is the roadmap that we could be looking at as we value these businesses?
I think if memory serves, if we look at comparable businesses which have become established, specifically, frankly, only a couple of Chinese names come to mind, and some European players, and none of them are doing all of the businesses that Reliance is looking at getting. There are some isolated solar players, which you can compare the REC solar acquisition to, and so on. But definitely, I think somewhere around 2.5 times capital employed is definitely, something that I'm sure Reliance would also be aspiring to. Otherwise, they don't get into businesses unless they can make multiples of their capital investment. I mean, that's a fair way to look at it.
Okay, all right. That gives us a good perspective. The runway ahead, perhaps, that could open up as these, green businesses come on stream for Reliance Industries. Prabal, great talking to you. Thank you so much. And we hope to, touch base again once the announcements are out, and let's see what indeed comes out of the AGM today, which, a reminder, of course, the proceedings kick off 2 o'clock onwards. And of course, you'll get live coverage here along with all the analysis on CNBC-TV18. We'll take a break on that note. We'll talk all things commodities on the other side with Manisha Gupta. Welcome back. So we're looking at the market picking up a little bit of momentum now. There's about a 50-point upward move on the Nifty, and the Bank Nifty is up about 0.25% as well. We have Mitesh back with us for a fresh perspective. Mitesh, so what would you do? I mean, are you inspired by this little buying that's coming in? Any index trades right now? If not, then stocks?
So I'm inspired by the Bank Nifty. So I've been complaining about the non-participation of Bank Nifty for the last many days. I think today we have some signal. Buy here with the stop below 51,000. That's about 250-point kind of a stop. And we'll look at a target of around 51,750, 800 to begin with, and then maybe even higher levels. And I also have a banking stock as a recommendation, which is IndiGo Bank, recommending to buy here with a stop below 1,400 for a target of 1,450 and then secondary target of 1,480. So quite positive on banking index and IndiGo Bank. And that apart, I think the Adani Group stocks are looking slightly weak. So I have a sell on Adani Ports, and it's trading around the trigger level of 1465, 1466. It's trading at 1470 right now. So sell below 1465, keep a stop at about 1492 and look for targets of 1410.
Got that. Thank you very much, Mitesh, for that. So those are specific trading ideas. Markets picked up right back up about 50 odd points or so. Let's focus on commodities now and what's top of mind. Manisha is here to help us with that. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'm looking at metals. Today isn't such a great day because we have seen some profit taking coming in. So most of the metals, Nifty metal as well, continues to decline. But I'm looking at a bigger picture here. The month of August has been on the positive side. After those declines in the month of June and July, August at this point in time seems to be closing on the positive side. We have gold up 4.5%, silver is trading in the positive. Copper prices also have come off sharply from its all-time highs of 11,000, trading at around 9,200, but managing to close August just about in positive. The better gains clearly have come in from aluminum and zinc, 9 to 11% of gains there, and steel prices also have turned around from its multi-year lows to about 4.5% of gains in the month of August. What has worked for the metals is the decline in dollar index. Even with those bit of a gains, it still is trading at around 13-month lows. The markets also are looking at the US Fed rate cut expectations in the month of September. And then there is higher EV production numbers that we've seen come in from China. Even the diesel demand in Europe has been declining because much of their fleet is moving on to EV. That is where the metal demand really seems to be coming in from. And then, of course, there is demand from decarbonization initiatives, and many of these metals are part of that as well. What doesn't seem to be working for metal prices, especially in the last couple of days, are the reports from BHP, which says, or warns rather, that the demand from China continues to cool down in 2024. BHP also goes on to say that especially when it comes to copper, the last year demand growth in China was to the tune of 6%, but this year could just about be at 1 to 2%, so not a very great number there. Also, uncertainty ahead of the US presidential elections in the month of November are keeping many of these markets jittery. Going forward now, a lot of banks and brokerages still are positive or bullish when it comes to aluminum and zinc, and not so much for the other metals there. Citi, to begin with, is bullish in sense of aluminum for 2024 fourth quarter and all of 2025 as well. They expect the prices to average around $2,800 a ton in 2025. Citi also anticipates the zinc prices to continue to gain up as well, and for that, the target is 3,100 for the first quarter of 2025. ANZ is bullish on copper. They anticipate a price of 99.29, and there also is a report from ING. They also are in favor of buying copper to the tune of 99.50 as an average for all of next year.
All right, Manisha, thank you very much for that. That's commodities in focus. We'll take a quick break here. We are back with our special segment. It's the economy. Ramani Dhati, CFO of Team Lease, and Lohit Bhatia, President of Workforce Management at Quest Corp, will be on the program, and we'll discuss trends in hiring and the state of employment in India. Stay tuned.
On It's the Economy today, we look at the hiring pace of corporate India. As per the economic survey, the total number of employed Indians is around 57 crore. And the India Employment Report of the Labour Ministry says that about 11 crore are in the formal sector. The rest are, agriculture and other non-formal services. Now, recently, this formal job market has faced some shocks. For instance, last year, total hiring by one of the largest employers, the infotech IT companies, contracted. I mean, not just slowed, it contracted. Then, second, there have been protests against Agniveer scheme, lateral recruitments into the government, indicating there is a problem of jobs. The government too appeared to reflect the concern on the ground in the budget when it announced 3 employment schemes and even 1 skilling scheme. So, is India creating less formal jobs? The people who would know best are the hiring companies, and joining me are Ramani Dhati, the CFO of TeamLease, and Lohit Bhatia, President of Workforce Management at Quest Corp. Lohit and Ramani, thank you very much indeed for your time. Ramani, let me start with you. You all have put out a report. You all have surveyed people on hiring intent. Just give me the back numbers. Compared to, 2023 first half, second half, and 2024 first half, how has the hiring trend been?
Sure, Lata. So firstly, compared to last year, we are seeing good increase in demand in sectors like manufacturing, engineering, retail, e-commerce, FMCG, FMCG. IT and to some extent, even BFSI is still facing a little bit of headwinds. We are seeing single-digit growth in those sectors. In fact, IT for a long period, it was declining on overall headcount for us as well as in general. But now we are seeing the headcount being stabilized in IT, and we are expecting positive growth coming from Jan 2025 onwards. Also, in terms of sectors as well as locations, metros still are absorbing the maximum employment generation as far as formal jobs are concerned. And the fresher hiring intent, there is a slight improvement compared to H1 of this year. So there is about 4% improvement compared to Jan to June period versus the coming half year for this year. And also in less than 5-year experience profiles, we are seeing good increase in demand. However, for mid and senior level position, as of now, we have seen a slight drop in the demand, but overall outlook has been positive as of now.
Very important, if fresher hiring is good and it's only senior hiring that's seeing some plateauing, that is still a huge positive. And I get your numbers. I think your survey said that fresh hiring was 68% of the people you surveyed said they will hire freshers, whereas for the second half, 72% have said. So clearly, fresher hiring seems to have increased. Lohit Bhatia, again, give us an overall picture first before I come to this perhaps unnecessary worry over IT. How has the hiring been at Quest Corp's end last year, 2 halves, and this year?
Sure, Lata, thank you very much and happy to be on your show. I think first we should start with the overall macro picture. India is about 1.4 billion people. Of that, if you look at the people who are in the working age population is about 89 crore or about 890 million. Of that, the labor force participation, as you've also pointed out, and so does the Economic Survey of India, clearly reflects that we've got about 57% of India's population, which is in the labor force today. There are 2 or 3 dynamics below that data. The first dynamic is that we've got almost 79 to 80% of Indian population in informal work. And we've got only about 21% people in formal or regular jobs, which are backed up by social security, which are backed up by pension and other benefits as well. So this gives you a disparity between low wages versus high wages. I think the last 33 years, what India has been able to effectively do is focus on the white collar postgraduate as far as the liberalization are concerned. We are all beneficiaries on this call. Most of the channel members are the ones who've probably been in that cohort. What the government is now trying to change is they're looking at the base of the pyramid. They're looking at the blue collar, the gray collar worker. Why do I say that? One, you have a transition of informal economy happening to formal. The second transition is rural to urban India.
Yeah.
The third is in the last 20 years, we've spent a lot on education and skilling. Can we do more? Obviously, we should do more. But we have still spent a lot on that. when you spend on education and skilling and you ensure everybody goes up to a 10th standard or a 12th standard, they do not want an informal job on the farm either as Manrega or as a casual worker. They are looking for formal jobs. They're looking at jobs which back social security. So if you look at Quest's own data, we came out with our Q1 results. We were 3,000 shy of 600,000 mark. In the last 1 year itself, we've grown at about 61,000 net addition to employment. However, the bigger number is hidden in the UAN. During a year when Quest added 61,000 net jobs, we added 166,000 people who came to Quest for the very first time taking a UAN number from us. What are we telling you? We are trying to tell you that a lot of informal workers are moving to formality. And an average wage here is about 22,000 rupees a month. So that shift is...
One minute, Lohit. Can you just repeat that number again? How many people did you all arrange in terms of staffing in FY23 and then in FY24? What you call the UAN number?
So in FY23, it was about 56,000 people. And 56,000 people, Lata, is net addition. We have gross adds, the people who come to our employment, but then we have attrition. The difference is the growth which happens in employment. It was 56,000. It grew to 61,000 in the last financial year. That's the first data point. However, again, 61,000 net additions, the more data point that gives us more pleasure is that 166,000 people came to Quest and seek the UAN for the very first time. They could be aged anywhere between 18 and 24. So again, Lata, I come back to the point. People are looking not to be dependent on Manrega. Manrega earns you only 205 rupees for 115 days. People are looking for formal jobs backed up with social security. So the government's discussion in this budget, and I like the fact that in the budget they came out with employment-linked incentive programs. They've not just spoken about employment 27 times in the budget, they've given 2 trillion rupees to back it up with what they intend to do. And that's the transition of the economy from informal to formal, backed up by formal jobs.
No, that's excellent. Just one more number, if you can give me. You said 166,000 were the gross additions to UAN number. And the net additions were 61,000.
The total gross additions at Quest level, Lata, in a year is about 300,000 plus. Of that 300,000 plus, people who already had a UAN were about 140,000. And people who did not have a UAN and came from informal to formal were 166,000. Net addition was 61,000. I'll also spend I'll also spend 30 seconds on IT because you spoke about it.
No, I think just a minute. Lohit, 1 minute. Let me just get Ramani's numbers also on this. Ramani, what are Team Lease's numbers in terms of net addition? I think even you all have about 300,000, 3 lakh employees or even more. What has been the net addition to employment over, say, FY23, FY24, FY25?
Yes, Lata. So in a month, we do gross additions of roughly about 25,000. Out of the 25,000, almost 6,000 of them are first-time enrollments to EPFO, so new UEN numbers. So these are either the new employees or the employees that are getting shifted from informal jobs to formal jobs, like how Lohit has explained. So the net addition for us in a year would be roughly about 50,000 odd. And about 25 to 30% of them are either the shift from informal to formal or the new UEN generators.
Okay. And would you have, was FY24 better than FY23? Is FY25 currently better than FY24? The numbers are higher.
Yes, that's right. So we have been consistently growing about 20% on the volume growth in the net additions year on year over the last 2-3 years.
No, that's definitely music to my ears and for anybody who's looking at employment. Now, Lohit, this worry about IT and, whether the fact that they contracted last year is giving a fear. That sparks the fear that perhaps, Bangalore homes are not, rentals are falling. It has a multiplier effect. So is that decreasing the formal employment?
Fair enough. I'll just first go back to that data that we started with. 57 crore or 570 million people are in the workforce as far as India is concerned today. Reflect that with the IT number. As per NASSCOM and the IT industry, we've got between 5.5 to 6 million people in the IT industry. So first data point is a total of only 1% of India is actually employed in the IT market as on today. Yes, I do agree that they have a disproportionate contribution to the economy. They create about $250 billion of services export, which is very, very crucial for the nation. They are also the 5.6 to 6 million IT workforce is part of the overall 120 million people which are in the formal jobs. So hence there is an obsession of the people all the time to know about what is happening in IT. But Lata, in IT, what is happening is we should rather look at three constituents. IT can be broken up into IT services companies, which are the listed and the large companies which all of you track and write about. There are the GCCs, and then there are also the enterprises who hire IT professionals, but within the core sector. It could be banking companies, it could be retail companies, it could be manufacturing companies, and so many others. What's happening in the last 20 years in India is, as the advent of IT happened, a lot of global market work came to India for what is called as transactional management. You're doing AR, AP, you're doing records, receivables, and payables and other things. As you move up in the value chain, you move from transactions to transformation. That's where generative AI and a lot of cutting edge technology starts to get used, and that work starts to happen. A lot of GCCs which have grown in India have grown on the back of transactions increasing for their global companies and hence setting up shop in India. And secondly, going into the transformation. The third aspect which has now started to happen with the new GCCs coming is even further, which is product and IP development. This is the time when GCCs move to the next level. They start to build product and IP in the country itself. And whenever this transformation will take place, we will see some degree of shift of the workforce and the hiring intent from traditional IT services companies to GCCs. That's the first part.
Yeah,
I think we must understand that recalibration has taken place or is taking place. IT workers are still the 5.5 to 6 million. Second point, Lata, and as you know, in 2021, there was a huge FOMO. Almost everybody in the IT services world was hired at 40, 70% increases and hikes in wages. That is not happening again. And I think that's what is probably coming as a shock, because in the last 8 quarters, it's been a little bit of downsizing to rebalance the total projects versus the total deployed strength. But I must tell you, green shoots have
started in the IT. I'm very sorry I'm rushing you.
Yeah.
I'm very sorry I'm rushing you because I get all of 12 minutes with both of you. Lohit, just give me a number. Percentage rise in the number of people you have staffed in FY25, FY24, FY23. Is there a rise? What is the rise?
So FY22 was our highest as far as IT is concerned. And at that point of time,
I meant overall.
Yes, and we were looking at overall a number of about 5,000 to 6,000 open mandates and demand in IT at any given point of time. In the year FY23-24, that open mandate and demand shrank to as low as about 1,000, 1,200 at any given point of time in the IT industry. Today, it's back up at about 1,500 to 1,600 open mandates with IT at any given point of time.
Lohit, I'm asking you overall, not IT. I'm just asking you overall, what is the increase in staffing that you all have done?
61,000, Lata, which was the net additions last financial year. This financial year, first quarter results are already out. We've achieved 30,000 already in the first quarter itself.
Okay, then we are, we shouldn't be complaining about hiring at all. Ramani and Lohit, thank you very much. It was a rushed conversation, but the big takeaway from both of you is that there is a steady 20% and as Team Lee says, and perhaps even more in Quest Corp in terms of hiring by Indian industry. So not to complain, the worry is perhaps overstated. On that note, we wrap up on Bazaar. Chartbusters coming up.